Hey everyone, welcome back to Crypto Cash. Thank you so much again for joining me here. I hope you're having a fantastic day. Let's take a look here at Solana, see what's going on. Double checking some important factors here, such as this support level that didn't hold at all. Just kidding, it technically held the first time at 125, recovered, and since then Bitcoin lost 80,000. So we're starting to see kind of this free fall for a lot of altcoins. So you can pretty much expect this to be the case here moving forward for a little while until the market starts to stabilize. And with all these tariffs and trade wars, it's just it's not a good market for crypto, right? This is like a secondary or tertiary market for most people, and specifically those with a lot of money, and they're dumping their Bitcoin first, and that trickles down to these altcoins too. Okay, so what we're going to look at is some back-end liquidation data, of course, but also some key macro levels here. Not necessarily fibs, of course, we can all update the chart and provide that to you, but I know people put way too much emphasis on Fibonacci retracement levels, and I think it's important to recognize that it's, that's not all that trading is. It's kind of a placebo effect. It gives you a little bit of comfort, but truth is it matters very little. What matters the most is when fib levels align with key level supports and resistances that have been tested in the past. And we're going to look at that. If I recall correctly, I've mentioned $110 as that area, and I think it's pretty safe that we're entering that 100 to 110 zone. If we do see that here shortly, then we're probably likely to see a pivot or a bounce. That's a good consideration for dollar cost averaging. I'll highlight that on our playout chart. Those playout charts are available here on our Twitter, Telegram, and Discord. Future reference too, congratulations to our community members here for some nice profits. Not from our manual trades, because those have been struggling a little bit. Honestly, my swing trades are not looking great. But the trade alerts here for my day trading bot. It's basically a passive income source. We're up pretty significant amounts on only $50 per trade in the last month and week, basically 5 weeks. Some of my traders are doing what I don't recommend, and that it's using a large position size, but 500 per trade, 2,200 up on the last, 8 days? It's not too bad. Congratulations there, buddy. Just make sure you don't do that until we formulate, or we fully, make the strategy the best it can be. Right now we're testing out different take profit targets, and conservatively it's done very well for itself already. Okay, so let's look at the back-end data and kind of see what's going on. There's not a lot of liquidation on the downside here from a macro perspective. I mean, we could probably zoom out to like the 3-month time frame and see, but for the most part here, last month's worth of liquidation is completely gone. When we look previous to that as well, which we probably had to go even further, we're seeing not a lot of liquidation on the downside, because we've been above this 125 mark for over 6 months. Ever since September, we were pretty much above this range. So easy way to understand it, we don't have any macro liquidation. If we look at the smaller time frame, we can recognize there is some local liquidation, of course. Majority of that has been swept. So the truth is that the price shouldn't go much lower based on liquidation, but that's not the reason you take a trade, right? Now that liquidation has been swept, the likelihood of a recovery makes sense, but look at this liquidation delta that is fully bearish. That is not something you want to take a long into. Everyone and their dog is shorting this coin right now, so it doesn't make a ton of sense to do so. Keep in mind, market makers are very amazing at identifying when everyone starts shifting gears and everyone starts shorting. They're going to go crank it up and just absolutely rip your face off. So I would be careful of shorting what feels like the bottom right now. But I legitimately thought 125 to 135 was the bottom, which is why we took a long in that range and had to close that trade early over the weekend. It's just what happens, folks. It is common, very, very normal. But when you see me close a trade manually, make sure you understand that it's typically an invalidation that occurs when that happens. Future reference, I always highlight these things in our trade alerts. For example, Litecoin, Ethereum. Even though we took profit on our Litecoin trade, Ethereum, we had to close that one early too. And invalidation is a close below 2,100. We closed below that on Sunday, which is why I closed that trade early. Anyways, the whole point of me mentioning this is that these resources are here for you, folks. And when you take a trade, you need to know what you want to get out of it, and you need to know when to get out of it too. Don't just hold to the ground, keep removing your stop loss. That makes no sense in this market right now. Cool. All right, so just kind of giving that foundation there. We take a look here at let's go ahead and go with the weekly and recognize we're below all the important moving averages. The 200 SMA is hanging out at $93. Does add to confluence that $100 range. We looked previously though, I know that my chart is super messy and I'll clean it up when I post our playout chart. 110, if I recall correctly, it's right here in this range. It's at more like 113 as a rough estimate. This is a weekly candlestick closure here, and we're just gonna go ahead and highlight that to kind of pay attention to it, okay? Because what that basically shows us here is we got 4 weeks out of roughly 3 months, we saw the price action reject out at 113 and inevitably broke out and hasn't seen that since, albeit only one time. Okay, so the key takeaway here is that 113 might be a good consideration for a dollar cost average target, and you can kind of see here before the price action cup and handled out, that was a pretty significant range. Okay, so just something to be mindful of there. Okay, now if you're looking at the charts here and you're seeing, oh, $93 on the SMA, that's bullish, we're above that. Don't misinterpret that, folks. The 200 SMA is like the last line of defense. We're not in a good position right now. There's nothing here on the weekly that tells us you should take a trade. Okay. Now, if you do end up buying that dip, it's a tentative dip, temporary. It should be a dip that you buy with a spot bag. You don't use leverage and something like that. That's the easy way to understand it. Daily time frame, we recognize here we are below all moving averages here. That's the most important thing to recognize, is that we are below the trend. Lower lows, lower highs, minus this one manipulative outlier. It doesn't make a ton of sense to take a long position at this point. When we take a look, of course, stochastic and MACD are also diverging. We're getting closer to 30 on the RSI. This is commonly a pivot point or a bouncing point, but I don't really see that happening, because we were expecting Bitcoin to come down as low as about 76, maybe even 74,000. Okay, now keep in mind there's a lot of different scenarios in play right now, but for the most part the macro is terrible and you don't really want to take any longs into that. If you do take a long, again, spot bag is recommended, and if you use any kind of leverage, keep it low and make sure you watch it close. Okay, and that goes for shorts too, because we don't know how much lower this coin can go. We look at RSI, we're starting to become overextended here. As per usual, when you pass the threshold of 30 on the RSI, you don't close your trade, you leave it open. So if you have a short position open, you're probably better off holding it open. Okay. Same thing as well when it comes to bouncing off this level, or once it crosses over rather. Once we get back up over 7 or 30 on the RSI, then at that point you may want to consider closing your short position. But between now and then, we look at this here, we look at the hourly, for example, we can see that we are well below any confirming factor here, letting us know that a long position is remotely viable. So the simple way to understand it here is, if you take a long position, you're just hoping and praying that you get lucky. You don't trade in that direction. You don't trade with luck. You trade with skill. And skill right now, everything on the charts is telling us it's a very bad idea to take a long position with this coin. Okay, so that's just kind of the easy way to understand it. So I hope that made sense and I described that correctly. Once again, join us over on Twitter, Telegram, and Discord. I provide playout charts here pretty consistently, just kind of letting you know where things are at. There's other relevant information too, and some humor as well. So it's all there for you if you want it. Otherwise, I hope you have a great rest of your day. Be careful out there. Consider just adding to your spot bag as we go lower. I think 113 is a good starting point. We'll look at we'll identify other areas soon. I hope you have a great rest of your day, though. I really appreciate your time. We'll look forward to seeing you in the next one. Thanks again. Take care.